Well, you asked for it. So here it is. Ways to pay less in taxes as a business owner. Welcome to Conversations with Cortina. And yes, today's topic is ways you can pay less in taxes as a business owner legally. Did you know that most business owners pay more in taxes than they have to? If you are running a business and not taking advantage of the right deduction, tax strategies, and legal loopholes, then you are leaving money on the table. So today I am sharing the top ways to legally reduce your tax bill as a business owner. Paying less in taxes as a business owner, you may ask, why does this matter? Well, as a business owner, you have way more tax savings options than a W 2 employee. Many entrepreneurs overpay simply because they do not know what's deductible or how to structure their business correctly. Today's goal, I will walk you through the legal strategies to reduce your tax debt and keep more of your hard earned money. Remember, like, comment, and subscribe if you want to learn more about how to maximize your business profits and minimize your taxes. Now, let's talk about choosing the right business structure. You may not know this, but your business structure directly affects how much you pay in taxes. Choosing the right one can save you thousands. Let's look at a sole proprietorship and a single member LLC. Let's talk about how this works. Let's say you set up a LLC, but you don't register the LLC. You are automatically a sole proprietorship in the eyes of the IRS. But let's say you do register your LLC, your limited liability company, but you don't elect another tax classification. You are taxed as a disregarded entity, meaning you file taxes just like a sole proprietorship. So, what does that mean? What are the tax implications of that? This means all business profits are subject to self employment tax at 15.3% on your profit. Yeah, this tax applies on top of the federal and state taxes. So there's no separation between personal and business taxes. You report your you report your income on Schedule C of your 1040. So, who is this best for? This is best for new business owners just starting out, especially if you do not make over $40,000 per year in business profit. If you want simple bookkeeping and minimal paperwork, this works for you. Sole proprietorship and single member LLCs pay the most in self employment taxes. So, if you are making consistent profit, meaning if you are making over 40K per year, it's time to consider an S Corp. Now let's talk about the S Corporation, the S Corp, the self employment tax saver. How does this work? Well, instead of business profits being taxed as self employment income, you split your income into one, a reasonable salary, which you pay self employment tax on, and two, the rest as distributions, which you are not subject to self employment taxes. Now, let's talk about tax implications on this. Instead of paying the 15.3% of self employment taxes on all profits, you only pay it on your salary. The rest of your income is taxed only at your personal income tax rate, potentially saving you thousands. But you also must file a separate tax return for your business. Let's talk about some examples of tax savings with your S Corp. Let's say you make $80,000 in business profits. As a sole proprietorship, you're taxed the full $80,000 at the 15.3% self employment taxes. That means you would owe about $12,240 in taxes. Well, if you're an S Corp, then you would pay yourself like $40,000, and that is subject to 15.3% in taxes. Then you take the other $40,000 as distributions, in which you're not taxed on the self employment taxes. So the S Corp savings is around $6,000 in savings in self employment taxes. So now, who is this structure best for? The S corporation is best for business owners making more than $40,000 in annual profits. If you want to reduce your self employment taxes and keep more profits, this is also good for you. And if you don't mind a little extra paperwork and corporate formalities or payroll taxes, this structure is best for you. But remember that $40,000 or more. So, if you're making $40,000 or more in profit, switching to an S Corp can cut your tax bill significantly. Now, let's talk about a C Corp, a C Corporation. This is best for large businesses and investors. So, how does this work? A C Corp is a completely separate legal entity from the owner. The business pays corporate income tax at 21% on profits, and shareholders are taxed on dividends. Unlike a S Corp, there is no restrictions on who can own shares, so this can be good for attracting investors. So let's talk about tax implications. The corporate tax rate is 21%, which is often lower than personal tax rates. However, dividends paid to shareholders are taxed again at capital gains tax. So this could be double taxation. So remember that. If you reinvest your profits back into the business, you can maximize your taxable distributions. Now, who is this C corporation best for? This is best for larger businesses with multiple owners and investors. Keep that in mind. If you plan to reinvest profits back into the company rather than taking a big withdrawal, or if you want to take advantage of lower corporate taxes. But remember, C corps are great for big businesses, but smaller businesses will benefit more from an S corp. So remember that. If you're a big business, maybe with some investors, this is the way to go. If not, stay with the S corp. Now, remember when I told you about the LLC? And if you form an LLC, but you do not elect another tax classification, well, let's talk about if you do. If an LLC is taxed as an S Corp, do you have the best of both worlds? Let's talk about how this works. So you form an LLC, but elect to be taxed as an S Corp for the tax benefits. You get the legal protection of the LLC while enjoying self employment tax savings of an S Corp. So, who is this best for? This is best for business owners who want the liability protection but lower self employment taxes. If you want to keep your LLC but pay less taxes, now you have to remember there's a separate form you have to file with the IRS to elect a S Corp taxation for your LLC. But remember, the Hosh Group LLC can help you with this. We specialize in business formation. So if you have any questions about how you need to form your business for tax savings, please do not hesitate to reach out to Hosh Group LLC. We're here to help. Now that you know which business structure is best for decreasing your taxes, now let's talk about the biggest tax deductions you must take advantage of as a business owner. Now let's talk about how to maximize those business tax deductions. Every dollar you deduct is a dollar you do not have to pay taxes on. So let's talk about some common business deduction. Home office deduction. If you work from home, a portion of your rent, mortgage, utilities, or even internet is deductible. Vehicle expenses. Track your mileage or deduct actual car related expenses. Travel and meals. Business trips, conferences, client meals are 50% deductible. Also, advertising and marketing, website costs, social media ads, business cards, those are tax deductible. Professional services like me, accountants, legal fees, coaching, and consulting are tax deductible. Health insurance premiums. If you are self employed, your premiums are fully deductible. Remember, keep detailed records and receipts. The IRS allows deductions, but only if you have proof. Remember, detailed receipts. There are so many ways to pay less in taxes legally as a business owner. You can leverage retirement and health savings accounts. Retirement contributions and health savings accounts can reduce your taxable income. You can use smart depreciation strategies. If you buy business equipment, you can deduct it immediately instead of spreading the deduction over years. You can also take advantage of tax credits. Unlike business deductions, tax credits directly reduce the taxes you owe. Remember, paying less in taxes is not about loopholes. It's about using the tax code to your advantage as a business owner. Start planning now so you can save big once tax season comes. If you need tax planning help, feel free to reach out to the Hosh Group LLC. We offer tax advisory services to help business owners keep more of their money. Remember, I'm always bringing you real, no fluff strategies to help you build wealth. Now, I want to hear from you as an individual, as a business owner. Drop a comment below. And of course, if you have not hit that subscribe button, do it now so you will never miss an episode of Conversations with Cortina.